Hey everyone, it's Troy Dixon, your favourite funny talking realtor. It's kind of a crappy day here in Indiana, a little bit of rain, very overcast, so I thought I'd talk about something else that's kind of crappy, and that's the current interest rates. Now, putting that into perspective, obviously, right? The rates are nowhere near as good as they were 4 or 5 years ago, but we need to understand that 4 or 5 years ago, they were historically low. That's the wording, historically low. So I don't think we can expect, rates in the 2s or 3s anytime soon. However, that sticker shock going from a 2 or a 3 to a 7 really impacts people. As we get further away from that, people are starting to come to terms with a little bit more and go, well, it's been, 6 or 7% for the last 3 years. This is what I can expect. So we're getting to that point now. But understand with the rate, you're only paying that. The worst it'll be for you is right now. Whatever that rate is that you lock in, that's the worst it'll be. 3 things will happen, one of 3 things. The rates stay the same, great. You got the house you wanted, you're living in it just like everybody else. The rates go up, which I hope they don't, and you're laughing as other people are trying to buy houses with rates that were like they were in the early 2000s of 10%, 8%. Or the rates go down and you do what everybody did 5 years ago and you refinance, kick the can down the road, throw a couple of years onto your 30-year mortgage that you'll never see the end of anyway, and reduce your rate to a number that you feel more comfortable with and save hundreds of dollars per month. So the rate is temporary. Just remember that. If you can find the right house, get it. Pay the rate. There's other ways to do it. We can do rate buy downs, 3-2-1 buy downs, 2-1 buy downs, permanent buy downs, all those kinds of things. But that all requires money. If you can do it to where this is the worst it'll be, may not be ideal, but you can live with it for a minute, I would still do it. I think you're still going to get a better deal on houses. Once rates go down, house prices typically go up. So you can pay a little more per month, or you can pay $30,000, $40,000 more on the purchase of the home. So something to keep in mind. Let me know if you have any questions. I'd love to sit down and have a cup of coffee.